In a significant display of resilience, Coinbase has achieved remarkable financial success in the fourth quarter of 2024, driven by a renewed interest in cryptocurrency trading. The company's revenue more than doubled from the previous year, reaching $6.6 billion, a feat attributed to the surging trading volumes and a burgeoning ecosystem that is beginning to embrace digital assets more wholeheartedly. This surge positions Coinbase not just as a trading platform but as a formidable player in the evolving financial landscape. Coinbase co-founder and CEO Brian Armstrong emphasized the pivotal role the company plays in this transformation during a recent earnings call. He noted, "We like to say that on-chain is the new online," drawing parallels to the early days of the internet when businesses scrambled to adapt to new technologies. Armstrong suggested that up to 10% of global GDP could be operating on crypto rails by the end of the decade, highlighting the potential impact of cryptocurrencies on the broader economy. The financial results showcase a staggering 162% increase in transaction revenue, amounting to nearly $4 billion, as trading volumes soared by 148%. Notably, consumer trading volumes surged by 195%, indicating a reawakening of retail interest in cryptocurrencies. This resurgence is attributed to various factors, including increased asset volatility and the introduction of Bitcoin exchange-traded fund ETF products earlier in the year, as well as a favorable political climate with the election of a pro-crypto administration. Equally impressive was Coinbase subscription and services revenue, which grew by 64% to reach $2.3 billion. This growth was fueled by blockchain rewards, stablecoin revenue, and the introduction of the Coinbase One subscription service. The increase in stablecoin transactions, particularly USDC, which saw a 225% rise in on-chain payments, underscores the growing integration of cryptocurrencies into everyday financial activities. However, despite the positive earnings report, Coinbase stock saw a decline post-earnings announcement, indicating that investor sentiment may be tempered by broader market dynamics. As the cryptocurrency market continues to mature, experts anticipate that regulatory clarity will play a crucial role in shaping future developments. Armstrong himself remarked on this potential, stating, "We really want to drive utility to get this next wave of mass adoption going for crypto." In parallel to Coinbase developments, the regulatory landscape surrounding stablecoins is also evolving. Wyoming is on the brink of launching its first state-backed stablecoin, the Wyoming Stable Token, which aims to support public services while ensuring transparency and accountability through a minimum 102% reserve backing. This initiative reflects a growing trend at the state level to establish frameworks for digital assets as federal regulations remain in flux. As these developments unfold, the cryptocurrency landscape is witnessing a resurgence in interest reminiscent of the early days of digital assets. With experts comparing emerging projects to early investments in well-known tokens like XRP, the pre-sale market is buzzing with potential. New tokens such as Solaxi and Bitcoin Bull are drawing attention for their innovative approaches and the promise of substantial returns. The future of cryptocurrency appears bright as mainstream adoption accelerates, driven by technological advancements and increasing regulatory clarity. As more businesses and consumers engage with digital assets, companies like Coinbase will be at the forefront of this transformation, shaping the way cryptocurrencies are integrated into the fabric of everyday financial transactions. Ultimately, the next few years may well define the trajectory of cryptocurrencies in the global economy, making it an exciting time for investors and enthusiasts alike. As the cryptocurrency landscape continues to evolve, recent developments surrounding Bitcoin have ignited fresh interest among investors and institutions alike. On February 14, 2025, Bitcoin's leverage ratio surged to its highest level this year, signaling a growing confidence in the digital asset. This uptick comes at a time when GameStop, the once meme stock darling, is reportedly considering investments in Bitcoin and other cryptocurrencies, reflecting a broader trend of traditional companies exploring the digital currency space. The leverage ratio, which measures the amount of borrowed funds used to trade Bitcoin, suggests that traders are increasingly willing to take on risk. This trend could have significant implications for the market. particularly if it leads to heightened volatility. Analysts warn that while increased leverage can amplify gains, it can also exacerbate losses during downturns. As Matthew Siegel, head of digital assets research at VanEck, noted, a high leverage ratio typically indicates a market that is either very confident or very reckless. In tandem with these developments, Bitcoin scarcity is becoming a focal point for investors. Recent data reveals that over 95% of Bitcoin has already been mined, with only 1.039 million tokens remaining. This dwindling supply, coupled with a significant decline in Bitcoin held on exchanges, signals a potential price surge. Sentiment reports that the volume of Bitcoin on exchanges has reached its lowest point in nearly 3.5 years, a situation often viewed as a bullish indicator. Adding to the narrative, U.S. President Donald Trump's administration has expressed interest in establishing a strategic Bitcoin reserve. This bold proposal could further legitimize Bitcoin as a reserve asset, drawing parallels to traditional reserve commodities like gold. Trump's administration currently holds nearly 200,000 Bitcoin seized during criminal investigations, and discussions are underway about leveraging this asset in times of economic uncertainty. David Sachs, Trump's crypto and AI czar, stated, "One of the first things we're going to look at is the feasibility of a Bitcoin reserve," indicating a serious commitment to integrating Bitcoin into broader economic strategies. The institutional interest in Bitcoin is further evidenced by GameStop's explorations into the cryptocurrency market. Following the news of their potential investments, GameStop's shares surged by up to 20% in after-hours trading. Although discussions are still in preliminary stages, the company's CEO, Ryan Cohen, has been seen engaging with industry leaders, including MicroStrategy's Michael Saylor, who has been a vocal advocate for Bitcoin as a corporate asset. GameStop's pivot toward digital assets is not without precedent. The company had previously ventured into the crypto space by launching wallets for managing cryptocurrencies and non-fungible tokens, although these services were discontinued last year due to regulatory concerns. Nevertheless, the company's current consideration of Bitcoin investments could mark a significant shift in its corporate strategy, aiming to modernize its operations amid ongoing challenges in the gaming retail sector. As Bitcoin navigates this complex landscape, factors such as the anticipated institutional demand, the potential for a strategic Bitcoin reserve, and GameStop's exploratory efforts are poised to shape its trajectory in the coming months. Analysts remain cautiously optimistic, suggesting that Bitcoin could test its all-time high of $109,588 in February 2025. Provided it maintains momentum and overcomes resistance levels around the $100,000 mark. In conclusion, as the convergence of traditional finance and cryptocurrency deepens, the implications for Bitcoin and the broader market are substantial. The unfolding dynamics could set the stage for a new era of digital asset investment, where familiarity and institutional backing may ultimately sustain Bitcoin's growth amidst an increasingly volatile environment. As companies like GameStop contemplate their roles in this evolving landscape, the future of Bitcoin appears not only promising but transformative. In recent days, the cryptocurrency market has witnessed a notable surge reminiscent of the volatility that marked its earlier days. Bitcoin's price has risen alongside the likes of GameStop, drawing attention from investors and analysts alike. This surge is largely attributed to a favorable change in market sentiment following the recent election of Donald Trump, which has sparked discussions about the potential impact of political developments on cryptocurrency valuations. Arthur Hayes, the co-founder of cryptocurrency exchange BitMEX and chief investment officer at Maelstrom Fund, has weighed in on the phenomenon. In a recent blog post, he contended that the newly introduced official Trump coin Trump/USD could eclipse Bitcoin BTC/USD in terms of market performance if sentiment remains positive. Hayes stated, "If some policy that those in the political know believe will positively impact crypto, Trump will surge well before the positive news is announced, and then Bitcoin will follow." This assertion underscores the growing interlinkage between cryptocurrency values and political events. Hayes highlighted that the Trump coin represents not just a digital asset but a reflection of President Trump's macroeconomic policies. He characterized political memecoins as the purest and most honest popularity metric for politicians, noting their role as a unique form of political advertising. He emphasized that the transparency of tokenomics allows investors to make informed decisions, stating, "If you choose to buy it, you buy it with eyes wide open." However, the emergence of political memecoins like Trump has raised legal and ethical concerns. A progressive think tank, Public Citizen, recently called for an investigation into the legality of the Trump memecoin, pointing to potential misuse and the risk of political bribery. Ethereum co-founder Vitalik Buterin has also voiced his apprehensions, suggesting that such tokens could become vehicles for corruption. As the cryptocurrency landscape evolves, the price dynamics of these political tokens are also noteworthy. At the time of reporting, the Trump coin was trading around $17.09, having lost a significant portion of its value since its peak last month. This fluctuation is indicative of the speculative nature of political cryptocurrencies, which are often subject to rapid changes in market sentiment. Alongside these developments, Coinbase has reported an impressive 88% increase in its revenue for the fourth quarter, fueled by the post-election crypto rally. This surge reflects growing consumer confidence in the cryptocurrency market and indicates that major exchanges are beginning to capitalize on the revitalized interest in digital assets. As the interplay between politics and cryptocurrency continues to unfold, market observers are keenly watching how political developments will influence the future of digital currencies. With the potential for further volatility and the emergence of new political tokens, the landscape of cryptocurrency investment is likely to remain dynamic and unpredictable. Moving forward, stakeholders will need to navigate the complexities of regulation, public sentiment, and technological advancements that will shape this evolving market. In the rapidly evolving landscape of cryptocurrency, two major developments have emerged, attracting significant attention from investors and industry watchers alike. As Ethereum gears up for its much-anticipated Pectra upgrade, which is set to launch on April 8, the cryptocurrency market is buzzing with speculation about its potential impact on Ether's price, currently hovering around $2,695. Meanwhile, Goldman Sachs has made headlines by significantly increasing its investments in Bitcoin and Ethereum exchange-traded funds ETFs, further hinting at Wall Street's growing acceptance of digital assets. The Ethereum Pectra upgrade, announced during the All-Core Developers Execution Call, aims to enhance network performance by increasing blob space, essentially data capacity, within blocks from 3 to 6. This move is expected to bolster Layer 2 data availability, reducing transaction costs and congestion on the network. The Pectra upgrade will help Ethereum regain its position as ultra-sound money, remarked Justin Drake, an Ethereum researcher. The implications of this upgrade could be profound, especially as market analysts speculate about its potential to drive Ether's price back above the psychologically significant $3,000 mark. However, caution is advised, as recent market trends have shown volatility, with ETH struggling to break through resistance levels. On the other side of the crypto spectrum, Goldman Sachs has quietly amassed approximately $2 billion in Bitcoin and Ethereum ETFs, a move that underscores the bank's growing confidence in the cryptocurrency market. During the fourth quarter, Goldman increased its holdings in Ethereum ETFs by an astounding 2,000%, while its Bitcoin ETF investments reached over $1.5 billion. Analysts suggest that this strategy is not merely a bullish bet but a tactical approach that reflects a balancing act of potential profits amid fluctuating prices. James Van Straten, a senior analyst at CoinDesk, noted that Goldman's position is more about hedging against price fluctuations than taking a net long position. This strategic investment comes as the cryptocurrency market experiences a dynamic shift, with Bitcoin's price nearing $100,000 and Ethereum grappling with market dynamics that have left it struggling to maintain its momentum. The divergence between Bitcoin and Ethereum prices has raised concerns about a potential bubble, particularly for Ethereum, which has seen a decline from its December highs. Furthermore, the acknowledgement by the U.S. Securities and Exchange Commission (SEC) of Grayscale's filings for an XRP ETF has led to a notable surge in Ripple's XRP, further complicating the competitive landscape for Ethereum. As the cryptocurrency ecosystem continues to mature, the race for ETF approvals is heating up, with analysts predicting that XRP and Dogecoin ETFs have a strong chance of securing approval before the end of 2025. This could reshape investor interest and market dynamics, particularly as both Ethereum and Solana vie for supremacy in the smart contract space. Solana's recent performance highlights the competition, with its rapid transaction speeds and low fees positioning it as a formidable contender. Looking ahead, the implications of these developments are vast. The successful rollout of the Pectra upgrade could rejuvenate Ethereum's market position, potentially rekindling investor confidence and driving prices upward. Concurrently, Goldman Sachs' substantial investments signal a broader institutional acceptance of cryptocurrencies, which may catalyze further growth and innovation within the sector. As both Ether and Bitcoin navigate these transformative changes, the next few months will be crucial in determining their trajectories in a market that remains as unpredictable as it is promising. The future of cryptocurrency continues to unfold, with each upgrade and investment shaping the narrative of this digital revolution. In an exciting turn of events within the cryptocurrency landscape, the BNB chain has overtaken Solana in daily transaction fees, marking a significant shift in the competitive dynamics among blockchain networks. As of mid-February 2025, BNB chain has not only flipped Solana but has also surpassed all other blockchain networks in terms of daily fees collected. This development signals a growing trend of increased activity and usage on the BNB chain, reflecting its robust ecosystem and the potential for future growth. The surge in BNB chain's performance can be attributed to several factors. Primarily, the chain has been experiencing a steady increase in decentralized finance (DeFi) activity, with numerous projects launching and thriving within its ecosystem. The adoption of BNB chain's native token BNB has also played a vital role. As more users engage with DeFi applications, the demand for BNB has risen, consequently raising the associated transaction fees. In contrast, Solana, known for its high throughput and low fees, has seen its own challenges. Despite a notable rebound in bridge volume, which reached an impressive $10.1 billion in early February, a 114% increase from the previous year, Solana's overall performance in the fee generation department has faltered. Analysts have pointed out that while Solana's bridge activity saw explosive growth, it still trails significantly behind Ethereum, which processed a staggering $38 billion in bridge volume during the same period. Solana's recent bridge activity can be largely credited to the Wormhole protocol, which has long been the leading solution for cross-chain transfers. However, the rising popularity of competitors like DeBridge, which recently surpassed Wormhole's weekly volumes, indicates a shifting landscape in cross-chain interactions. The last 3 months have been particularly telling for Solana, with bridge volumes skyrocketing from $1.1 billion in November to $3.2 billion in January. Despite these gains, Solana's reputation has been marred by concerns over network stability, with several high-profile outages raising questions about its reliability. As the competition heats up, Solana's ability to maintain its user base will be crucial in its quest to reclaim its position against rivals like BNB Chain and Ethereum. On the other end of the spectrum, Dogecoin is making headlines for its potential to challenge both Solana and Ethereum in market capitalization. After experiencing a remarkable surge in late 2024 where it tripled in price within weeks, Dogecoin has demonstrated stronger performance metrics compared to its counterparts. Analysts estimate that for Dogecoin to overtake Solana's current market cap, it would need to see a growth of approximately 167%, while a monumental increase of 792% would be required to surpass Ethereum. As the cryptocurrency market continues to evolve, the competition among these blockchain networks is intensifying. The BNB chain's recent success in daily fees is a clear indication of its growing influence, while Solana's bridge activity highlights its potential for recovery, albeit amidst challenges. Meanwhile, Dogecoin's unexpected resurgence adds another layer of complexity to the narrative. Looking ahead, the dynamics between these blockchain networks will be fascinating to observe. With institutional interest in blockchain technologies rising, the ongoing developments in scalability, fees, and overall usability will significantly shape the future landscape. As projects evolve and new innovations emerge, stakeholders will be watching closely to see which chains will rise to prominence and which will falter in this ever-competitive arena.